Hello, I'm Luke from Brownlow and welcome to today's Energy Market Snapshot. So to open the week, we've had a very volatile start. Essentially on Monday's morning session, we opened the day with prices, particularly in the gas curve, very high in comparison to the previous close on Friday, that is. Gas prices for the front month, front quarters and season, etc., were about 4p a firm up, which is a relatively significant move. It feels fairly quiet in this post sort of Russia-Ukraine kind of world, but in any case, that's quite a significant increase. Throughout the day, that was held relatively high throughout much of the morning, and what was driving that was basically the geopolitical crisis in Iran, obviously, and the continued closure of the Strait of Hormuz and the potential for that conflict to escalate further, to continue, and suggestions from the Americans that there was no deal in sight, trading fire on the Monday morning, so it was a very volatile start. By sort of midday, early afternoon, we then saw the price fall away very, very quickly, and that was on the basis of Pakistan, as part of the brokering arrangement in the conflict, presenting an updated proposal from the Iranians to have a full and final conclusion to this conflict. That was well received by markets, and you saw all of those early gains throughout the day completely reverse. And actually, at sort of 3 o'clock, you were looking at a market that was actually down within day. Now, by the end of the day, and these NBP gas markets trade till about roughly sort of mid to early evening, I would say, is probably about when they properly close. You then had a bit of market upward correction as traders took stock and actually realised that this may not have much legs in it. So the market at that point closed the day relatively balanced with where it closed on Friday. So a lot of volatility intraday, big spike upwards, drop within day, and then an actual close and parity. So it really does exhibit the kind of conditions that we're trading in at the moment, and that there are a lot of intraday swings, which is very unusual, but in any case is reflective of the geopolitical situation at the moment. Elsewhere, moving away from some of that quite sort of the geopolitical stuff to something a bit less important from global terms, but nonetheless still very important from an energy perspective. Gas storage in Europe is still fairly poor, and that is reflected in the prices. So we did start to see an appreciation of injections into European gas storage, and that was well received by markets to some degree, but we have seen that start to plateau more recently. Injections have been far more reduced more recently. As a result of that, you still have in gas markets in particular, and also in electric markets in the UK, very little difference between summer prices and the subsequent winter. So if you were to look at front month prices at the moment for June, and then even in looking at Q3 26 prices, they're very, very similar to the price that you would be able to achieve for winter 26. And that speaks to the fact that a lot of the gas has to be bought in the summer in order to then supplement the winter price. So there's very little propensity to actually buy in summer prices at the moment. It's just the nature of things at this stage. The further into the future you go, that seems to recorrect itself as market seems to factor in a potential for normality returning to the gas supply in terms of fundamentals. However, in the short term, certainly we are getting a lot of premium attached to summer prices. We would hope that corrects in the future, of course. And elsewhere, we have, from a short-term supply perspective, some relative positive news in that Norwegian flows are fairly strong into both the UK and Europe. There's been no real prolonged outages or anything of that ilk at this time of year, so there's still plenty of supply knocking about in the short term, and the renewable outlook is still fairly strong. Obviously, we're coming into more warmer climes, into the summer months, so you would expect that solar generation ramps up a little bit and that wind generation makes up a bigger chunk of the curve, that there's ultimately less supply side pressure on the gas side of things because demand is reduced. So with the majority of our gas in the UK, of course, being used for heating. So there is potential in the short term, but you are seeing a bit of a disconnect in that the gas price for the day ahead is still relatively high. The electric one is still subject to more decreases as and when we see some more potential on the renewable side of things. So there's a lot of moving pictures in this, but in any case, I think we should be braced for what could be quite a volatile week, geopolitical depending. So thank you very much for watching. Please do subscribe to us on YouTube or watch these videos on LinkedIn where we'll be releasing them. If you do have any questions, of course, whether they're market related or sustainability related, whatever, please come to our website, www.brownlowutilities.co.uk. You can get in touch with us via that, and then you'll be put in touch with one of our experts here, and we'd look forward to helping you out with any issues you have and indeed working with you. But thanks so much for joining us, and I'll see you in about a week's time.